Setup Monday. That means it's Setup Monday here at Brave New Coin. Let's take a look at some charts on this very, very bloody Monday indeed. We'll start with Bitcoin, and in general, as a litmus test, I use the 200-day moving average and the cloud. In the colored background there, we have VPVR and then just some arbitrary horizontal areas or zones here. And as a rule, if we break below the cloud, we are bearish. If we break below the 200-day EMA, for me, I like the EMA better than the MA or the SMA, then we are bearish. We're starting to break below the previous volume congestion area here. So none of this looks bullish. I can't even try to morph this into bullishness on lower time frames. Ideally, what you hope for post mega dump like we had the other day is some sort of chart pattern or anything. Falling wedge, inverted head and shoulders. Maybe it's too early to see any of that stuff just yet, but there's no real hope here until, we keep going to like 40. Markets are angry. Legacy markets are angry. ETH angry today. Lots of anger. Lots of angry selling for sure, but no bullishness to be found on the Bitcoin daily chart. Here's the alligator fractals. If you do like MAs better than the cloud or whatever, MAs are telling you to get out kind of end of November, mid-November maybe. And ever since then, just lower low, lower low, lower low. That's what being bullish or bearish is all about. If you're bullish, you expect higher highs. If you're bearish, you expect lower lows. And if you're non-trending, you're neutral. But we're certainly trending on lower time frames, and that trend has been just down, straight down. We're in between pivots here. So, I am pretty bearish in general. We'll see how today goes. Ultimately this week, ultimately the end of the year, but I don't know how salvageable this is going to be considering how terrible this looks now. But we definitely don't want to break the yearly pivot, don't want to break this volume area because that's just a revisit of 30 to 40. It has been pretty clean. 40 to 50, 30 to 40, 50 to 60. The zones, at least, hasn't been some like weird prices for the most part, but I can't consciously want to long this based on trend metrics. Certainly, this is pitchfork multi-year, just flipping between anything to try to see, even for the week, what's going on here. And if we do lose this pivot, we likely get bounced down to this next diag, which would basically be 35 and rising over the next month into Q2. But ultimately, I wouldn't expect to be bullish again until we're back above the midline of the pitchfork here and the cloud as well. I wouldn't expect to be bullish until we're back above 54, 5 or whatever this level is, all the way up there. So although the rate of change on a high zoomed out level is bullish, obviously there's a lot of room up and down in between then. And let's say we get ultra mega turbo bear next year, there's a 2-year MA support at 28, and there's also a 200-week EMA at 25, 200-week MA at 18, depending on how you want to view this, EMA or MA. Both to me are pretty valid for bottomy type areas on a macro mega downturn. But we could easily just stay in this range for a quarter. Even 30 to 60 sounds like an insane range, but it's definitely the devil because it's already been established as far as the lows at 30. The question people are going to be asking is if we tap on 40, is that going to hold? If we tap on 35, is that going to hold? If we tap on 30, is that going to hold? I don't really want to get to that conversation. That's not a good conversation to have. Do I want to buy the multi-month lows at 30? Do I want to buy the multi-month lows currently at 40, right? Somebody bought it the first time, at least on that predatory stab down we had. Volume even here so far is kind of nothing. So it's surprising that this amount of volume is pushing us down, but it just feels like nobody's stepping in on the other side of the book. Maybe they're looking at the same stuff I'm looking at, saying, yeah, trend is not good at this point in time. Flipping gears to ETH, we have flipped bearish on ETH as well. Unfortunately, with the bearish TK cross priced into the cloud today, feeling the full brunt of a potential edge-to-edge move as well as a move to the 200-day for ETH. That's somewhere around 3,300. And then if we look at that potential gross head and shoulders pattern on this time frame, that also gives you the same target bottom of the cloud, that EMA down there. And then if we look at it on the 4-hour, you can see it a little better, multi-shouldered head and shoulders, something nasty looking, certainly not bullish. It's almost as if all of October, some of November, somebody was like TWAP again, and then they just said nope, and flipped the switch, got super volatile. And how this turned out is in a not bearish or not bullish chart pattern. So yeah, I like 3333 if we keep cruising downward. If I'm trying to force something bullish, maybe we get a falling wedge type of situation, which should break up, but it just doesn't look good across the board. ETH's high time frame target for support is at 26. It hasn't hit that 2600. Hasn't hit that level on the 2-year MA, or sorry, 1-year MA since May 2020. So if you're going into Q1 expecting bearishness, looking for places to buy, that's where I'll be adding anything I'm letting go of towards the end of the year here. Just without knowing what's going to happen in Q1, I would be looking at this area for buys on ETH. Solana also into the cloud, bearish TK cross, mean reverting to this 200-day moving average, losing all this volume stuff going on here. Now, Twitter tells me Solana was down. Twitter tells me it wasn't down. Twitter tells me if I think Solana is down, I need to get out of my bubble. Whatever. It wasn't, whatever happened to Solana over the weekend certainly didn't help price. I think we can all agree on that. And again, all these, you want them above the cloud for bullishness. The flip side of this is, as everything definitely flips neutral to bearish, you can watch it if it does bounce. It's not going to go without you. Like it did in July, Solana bounced on 200, went through the cloud, boom. We don't look like that on anything right now. And for ETH, you need something back above 4,200. Ultimately, if you get a pattern like this that's established, you want a higher high above whatever the most recent right shoulder is. So that would also line up to 42 as well, just conveniently. But even if, no matter what chart pattern you think this might be, I don't think it's a bullish one. If it's a diamond, if it's a broadening wedge, I don't even know. But whatever it is, certainly it's not bullish looking. ADA has been bearish for a while, below the cloud, below the 200, death cross. First death cross since May, 2020 for ADA. Now, some of this stuff, if we do enter like a multi-month bear market, some of this stuff has very little support until ultra mega turbo lows. We're talking like 90% off. The support for ADA is down here between 3 and 16. That is quite a ways off from where it is now, certainly. DOT also below the 200, below the cloud, death cross looming. So as bearish as I am on ETH-BTC, none of this stuff looks good. Doge just continues to sell off on a death cross below the cloud. The support for Doge is at 6, currently 16 cents in USD. SHIB, I don't know or care what the price is, but on the 12-hour, it's at that support. You can't really look at this on the daily. There's not enough data, but this thing's been below the cloud since November. Fully mean reverting here, fully just Eiffel towering. And if this doesn't hold, like on Doge at 6 cents, if it doesn't hold for SHIB here, it's straight down back to wherever this price is, back to the previous consolidation. Now I expect these people to be, if they're still holding, the SHIB people, I expect them to have the most weakest of paper hands because they're new market participants. That's just how it is. I'm not saying you're a bad person if you've held SHIB or holding SHIB or made money trading SHIB. Good for you. But I'm just looking at the type of people trading SHIB are just new traders or people who aren't really traders who think they are, whatever. Point is, they probably have the least conviction that this thing is salvageable if it starts breaking lows. BNB also didn't quite hit that target of 1,000. Kind of an ugly looking double top here now. Matic's one of the few things that maybe still doesn't look terrible. Still within this ascending triangle. But it's hard to think if everything in the market gets crushed that Matic is going to stand alone and rise above it all. And then Link also, a lot of charts look like this in DeFi, just straight to oblivion. Link was not spared. Far below any rate of change it was held within for many years. So most of these charts shaping up differently than just a simple mean reversion. We can look at Sol and say, yeah, this, wherever this was. Sol, yeah, this is okay so far. And it is, it's salvageable for sure. But then there's some of the stuff like SHIB that I question whether or not you're going to see buyers here at the most recent consolidation in October, or the smart money is just out letting this thing go back from whence it came. So be safe out there, be smart out there. That's all there for this one. Like, dislike, comment, share, subscribe, and happy trading.